Most viewers hear two OCC-related trust bank or charter milestones before June 30th and assume the story is obvious. It isn't. The headline sounds bullish or bearish on the surface, but the real move usually starts when the market reprices the hidden mechanism underneath it. This setup matters because what 2500 XRP could be worth if two OCC decisions land by June 30th is not just a headline story. It can change the math for 2500 XRP faster than most holders expect. Stay with me, because the key signal is not the loudest one. It is the one that changes what happens next. By the end of this video, you'll know exactly which signal matters most and what it means for your next move. And I'll translate it into a real holder takeaway, not just another market recap. Most people hear a phrase like trust bank, charter, or OCC pathway and immediately jump to one conclusion: institutions are coming, so price must go up. The problem is that institutional interest is not a feeling. It moves through permissions, compliance, custody, reporting, and internal risk committees. That is why these next two possible OCC milestones matter, not because they magically force XRP to reprice overnight, but because they could reduce friction in the one area that has kept a lot of larger players cautious. If banks and funds get a cleaner operational path, XRP stops looking like a speculative token with a loud community and starts looking more like an asset that can actually fit inside institutional plumbing. So let's strip this down to what matters for a real holder with 2500 XRP. At a simple reference point, if XRP were at $1, that bag is worth $2,500. At $2, it is $5,000. At $5, it becomes $12,500. At $10, it reaches $25,000. None of that is complicated. What is complicated is the path from here to there. The market does not just price headlines. It prices credibility, access, and the belief that bigger capital can finally participate without stepping into a compliance mess. That is why the first proof beat is not the headline itself. It is the removal of a barrier. If one OCC decision improves the trust bank or custody side, and another gives the market a cleaner charter signal before June 30th, that is not just two nice news items. That becomes a chain. First, custody clarity looks more real. Second, institutional onboarding looks more plausible. Third, analysts and allocators can start modeling XRP with fewer caveats. And when an asset moves from maybe to maybe now, price often reacts before full adoption ever arrives. But this is where people get sloppy. A better bank pathway does not mean every major bank suddenly buys XRP. It means the objection list gets shorter. That matters because markets do not wait for perfect adoption. They move when the probability of adoption rises enough to justify repricing. In other words, XRP does not need every door opened. It just needs enough of the locked doors to become unlocked at the same time. Now put that into three realistic scenarios for a 2500 XRP holder. Scenario 1 is the muted outcome. One OCC milestone lands, the second gets delayed, and the market treats it as encouraging but incomplete. In that case, XRP could see a short burst, maybe a relief move, maybe a momentum week, but it likely struggles to hold a full narrative re-rating. If XRP moved from $1 to $150, your 2500 XRP goes from $2,500 to $3,750. Useful, but not life-changing. At $2, that same bag is $5,000. Still meaningful, but only if you came in with the right expectations. Scenario 2 is the cleaner institutional signal. Both decisions land in a way that investors can interpret as reducing future friction. This is where the market stops debating whether the banking path is theoretical and starts debating how much of that future should be priced now. In this range, a move from $1 to $3, $4, $5 becomes easier to discuss without sounding detached from the catalyst chain. At $3, 2500 XRP is worth $7,500. At $4, it is $10,000. At $5, it is $12,500. That is the zone where a smaller bag starts behaving like a serious financial lever instead of just a watch list position. Then there is scenario 3, the one people love to post about but rarely think through. Both OCC milestones land, the market pairs that with broader regulatory progress, and institutions start getting discussed not as a someday story, but as a positioning story. That is when price can overshoot rationally in the short term because traders front run the possibility of later inflows. In that environment, $6, $8, or even $10 becomes a momentum conversation, not a long-term fantasy conversation, and that changes the emotional math. At $6, 2,500 XRP is $15,000. At $8, it is $20,000. At $10, it is $25,000. But here is the midpoint turn that matters more than the price targets. If these two OCC decisions are so important, where does the first meaningful repricing actually show up? Not in the final destination, in the market's willingness to stop discounting XRP every time institutional talk comes up. That shift is subtle at first. You see it in the way analysts frame risk. You see it in the way traders stop treating every rally as purely retail driven. You see it in how fast narratives change from "can this happen" to "how quickly could this scale." That is the second proof beat. Institutional engagement is not just about buying pressure, it is about legitimacy pressure. Once a large pool of capital can imagine participating, even before it fully does, the discount rate on the asset changes. People stop valuing XRP like a stranded speculative trade and start valuing it like a network attached to a clearer financial pathway. Markets can move violently on that shift alone. If that sounds abstract, make it personal. Say you hold 2,500 XRP and your average cost is 60 cents. Your position cost roughly $1,500. At $1, you are at $2,500. At $3, you are at $7,500. At $5, you are at $12,500. That is the difference between a decent trade, a debt payoff, or a used car fund, depending on your situation. Now say your average cost is $1.40 instead, suddenly $1.50 barely matters, $3 matters a lot, and $5 becomes the point where patience feels vindicated. Same bag, completely different emotional experience, and if your bag is smaller, the math still matters. 500 XRP at $1 is $500. At $5, it is $2,500. 10,000 XRP at $5 is $50,000. The point is not to worship a number. The point is to understand that catalysts change what a bag can realistically do. When people miss this, they either sell too early because the first move feels big, or they hold through everything because they never defined what success looks like. This is also where I want to slow the hype down. If you are watching this with a 2,500 XRP bag, these OCC decisions do not remove downside. If one decision slips, if the market decides the timeline is too slow, or if the broader crypto tape weakens, XRP can still disappoint in the near term. That means your planning has to include the boring version, not just the exciting version. If XRP is at 90 cents or $1 by late June, your bag is still roughly $2,250 to $2,500. If it is at 130, that is $3,250. Those outcomes are not thrilling, but they are part of a disciplined range. If this breakdown is helping you map your own XRP range instead of just chasing a headline, hit like here because this is exactly where most people lose the plot. They hear institutional catalyst and skip straight to moon math, when the real edge is knowing which step in the chain the market is actually pricing. Now think about the timing. April matters because this is when people begin positioning for summer outcomes before they are fully visible. That means by the time June 30th gets close, some of the move may already be in the chart. This is why you should not ask, will the news pump XRP? The better question is, how much of the banking pathway is still not priced, and what happens if two separate signals land close enough together to feel cumulative instead of isolated? That cumulative effect is the real opportunity. One milestone can look like an exception. Two milestones can start to look like a pattern. A pattern is what larger investors need before they take a developing theme seriously. They do not need certainty, they need a cleaner probability distribution. If the probability that XRP becomes easier to hold, custody, discuss, and model keeps rising into June 30th, the market may not wait for the full institutional wave to arrive before adjusting the price higher. And that takes us back to the opening question. Does this change XRP in a way the market can price immediately? Or is it just another short-lived headline? The answer is that it can be both at first. The first move may look like a headline reaction. The durable move comes only if the market decides the two OCC decisions reduce real friction for future institutional use. That is the key distinction. Not excitement, not branding, friction. For a 2,500 XRP holder, that means your most useful framework is not one magic target. It is a stack. Soft outcome, $1.50 to $2, and a bag value of $3,750 to $5,000. Stronger outcome, $3 to $5, and a bag value of $7,500 to $12,500. Full narrative squeeze, $6 to $10, and a bag value of $15,000 to $25,000. If you already know what each of those ranges means for your bills, savings, taxes, and risk tolerance, you are ahead of most of the market. So ask yourself a sharper question in the next few weeks. If both OCC decisions land by June 30th, what would make you take profit? What would make you hold? And what result would prove the market still is not ready to price the institutional story? Write that down now before the timeline gets noisy, because the biggest mistake small bag holders make is waiting for a catalyst and then improvising their decisions after the chart starts moving. And one last personal implication before we close. If 2,500 XRP somehow became $12,500, that might be a 6-month emergency fund for one person, 3 to 6 mortgage payments in some areas, or enough to clear a high-interest card balance that has been draining your income. If it reached $20,000 to $25,000, now you are talking about a used vehicle, a house down payment contribution in some markets, or a serious portfolio rebalance. Those are not abstract numbers. That is why scenario math matters more than slogans. The real payoff here is simple. These next two OCC-related decisions only matter if they make larger capitals say yes more easily. If they do, 2,500 XRP stops looking small. If they do not, then the market will expose that fast, and you are better off treating the move as temporary rather than transformational. That is the line I would watch into June 30th. If two OCC-related trust bank or charter milestones before June 30th really changes the market's expectations, 2,500 XRP stops being an abstract number and starts behaving like a real position with real timing risk. Show whether this actually lowers the barrier for institutional engagement and what that would realistically do to XRP bag math. A real XRP holder should leave with a concrete sense of the downside, upside, and position sizing implications. Drop your exact XRP bag range in the comments if you want, whether it is 500, 2,500, or 10,000, and say which June 30th scenario you are actually planning for. Subscribe if you want the follow-up the moment one of these OCC signals lands, because the first headline will matter a lot less than what it changes in the pricing map right after